Alrighty, good morning, traders. This is Blake Morrow. You are listening to the FACE webinar. Let me go ahead and grab the screen really quick. Hope everybody's having a great trading session. Hold on really quick. Hold on one second. Okay, sorry about that. I had to turn this down for a second. Okay, sorry guys. I'm back. So just hold on real quick. Okay. So looks like this is something which is pretty interesting. Just so you guys know, uh, today is the first day that a couple of guys have gone back into the office in Connecticut. So that's interesting, right? It's like here I am over on the other side of the country in the United States, and I'm on complete lockdown. It's not complete lockdown, but for the most part, and they've got a couple of them that are heading back into the office. So it's a really interesting dynamic that's happening right now. Also, I want to give you guys an excuse really quick before I even get started. So, have you ever had one of those nights where you tossed and turned all night? That would be my night. I went to bed and I laid around and flip flopped in bed for like 3.5 hours last night before I finally fell asleep. So if I sound a little tired or I start yawning on you guys, which is normal anyway, because I get up like that at like 3 o'clock in the morning. If I, yawn more than normal, that the reason why. It's like, I don't know why I just toss and turn all night. I don't get it because usually I can fall asleep pretty quickly. So anyway, let's talk a little bit about what's happening in currencies and I was just a little bit ago. I was short the euro dollar at 111.98, and as we were, because this is before it was had tried to break down. Um, it tried to break below this 111.90, and it took out some stops below those lows. You can see that these are all these 15-minute, or you could say they're hourly lows, right? So we went out and took out those lows, and I'm like, okay, here we go. We're going to make a move for that 111.50 that I've been hoping for the last 2 weeks. So I was short at 111.90, 111.98, and then it started to probe down there, and then it looked like it was going to give us a false breakdown. Well, it did. Let me reset that chart. So, it gave us a little false breakdown, and I ended up getting out at like 99 or whatever. Like I basically flatted the trade. But now here we are squeezing. So, and now we're faced with a possible false breakdown in the euro dollar, which could take us back towards, I mean, I would venture to guess to 111 or 112.15 to 112, 20s. I'm not overly excited about the euro at this moment because it didn't break down. I was thinking, okay, here we're going to break down. We're going to get a move to the 50 level, and I was going to ride a little piece down if we could. But now it's like, okay, we're still range bound. So, in all actuality, the euro could rally back towards 112.30 before rolling back over again. So, we're just kind of faced with these very annoying little moves, and it's not just the euro dollar as well. If you guys are Forex Analytics subscribers, you got your analysis on the Aussie this morning. Very similar situation on an hourly basis. Yesterday we had a breakdown um below this triangle support. Last night we had a break into new highs, false breakout. Relative strength was divergent, you can see that, and then it rolled over. I mean, we're seeing, this is probably going to be pretty common in currencies until we have a sustained breakout in the equity market. So if you look at equities, this is how I'm viewing them right now. Okay. Um, we have this, triangle consolidation, which is setting up. Where, sorry guys, let me grab a drink of my coffee really quick. I'm gonna be doing this all day for the next few hours, I'm sure. Okay. Um, like I said, this, I think that the equity markets are consolidating right now. And we're going to be in a situation where we're bouncing around, not only in equities, but currencies are going to give us a lot of these false moves until we can get a sustained break in the S&P, whether it's out of this triangle or to the upside or to the downside. Until we see that happen, you got to imagine that currencies are going to be probably pretty challenging as far as directionality goes. So just, be on the lookout for the equity markets to really guide us. That does that mean, that currencies can't move without them? No, that doesn't. That's not a that I don't think is we can see individual currencies actually start to break for whatever reason, whether it's a macro theme or some sort of you know some sort of reasoning to get them moving. It's entirely possible, but um, whether it's jobs report or interest rates, or that somebody thinks that rates are going to start moving, that can happen. But really, I think over the course of the next couple of days, we're going to be setting up for a good move in July. I know as we go into this new quarter in the second half of the year, we're probably going to be expecting some pretty explosive moves over the course of the next week or two, because this is only going to, you think about this consolidation. This consolidation is probably only going to go on for another, you know, few days till after this weekend. After the 4th of July weekend, we're probably, this elongated weekend. We might actually even break out tomorrow. Um, that's when we're going to get a more of a sustained move in the currency market, in my opinion. Okay. So let's just kind of keep that in the back of our mind. And that's why when I was shorting the euro today, and I was trying to make a few bucks on the short side, I didn't really hesitate to take the trade off. When it looked like it was going to be a false breakdown, I'm like, screw it, because I know that equities aren't breaking out. Now, I was hoping that the equity markets might break down a little bit, but if that happened, that might be the reason that we get a little bit of dollar strength. But I'm not especially keen on it, especially when we're looking at equity markets right now, pre-market, that are down 0.5% or whatever. We could very easily bounce back to break even before the markets open. So I'm not, like I said, I'm not sold on any direction. I don't think that there's going to be any sustained breakouts. So that's why, let me go over to the cable. So I was looking at the cable, and I'm like, man, and we were above 124. We are at 124 05, I think, this morning. And we were in the chat room, and I'm like, man, I really feel like I should be shorting the cable up here, because I think this 124.50 or 124.20 is going to be a pretty big resistance. And it's really this trend line here. But I thought this resistance would be pretty big, and I didn't short it. Instead I shorted the euro dollar, and I should have been, just shorting the cable. But the cable, on the flip side, is if we start breaking into new highs, which is entirely possible based on the move yesterday. If the cable starts breaking new highs, that's gonna usher in some dollar weakness, probably across the board. That's something else to think about. You have the Aussie dollar, which is also, this was the chart of the day yesterday. If you guys missed the blog, um, we're in a triangle type of consolidation in the Aussie dollar, which I mean, if you look at the Aussie, this is a 4 hour in the Aussie, and let's go ahead and just look at and compare it to the S&P 4 hour chart. Oops, that's not what I wanted to do. Let's do it like that. Dang it. Okay, let's do it like this. There's the Aussie. Here's the S&P. And let's go to a 4 hour chart. Okay. Why is that not drawing? Yes, trend line. There we go. What the hell's going on there? Okay. So if you look at the S&P and you look at the Aussie dollar, they're the exact same charts, right? I mean, the exact same charts. So this is it, which is it's great. There, you know, like I said, it's great because we know what to do when it happens. It's bad because we know that we're not going to get anything really happening in probably the Aussie or the euro or the pound or anything on a sustained basis without the S&P moving. But the good news is, like I said, after today or after this week, excuse me, we should probably get a breakout in the S&P, whether it's to the upside or the downside. It's up to you know, the market to figure out, not you or I. I mean, we can make our assumptions what we think is going to happen, but right now we got to just let the market do the work for us. Okay, so here's the Kiwi range bound as well. Dollar Canadian. The dollar Canadian, it came under a lot of pressure yesterday. I have to say, I was actually more stunned that we failed epically in the dollar Canadian. I thought the dollar Canadian was going to make I thought the dollar Canadian was going to at least hold up to at these levels initially. Oh wow, look at crude coming down. Hold on. So we were talking about. Sorry, I'm getting a little off topic here. I was in currencies, but we were talking a lot about this yesterday, and or the last couple of days, and I'm irritated that I didn't go back and sell crude because even Chi this morning in our chat room, he asked if I sold crude, and I'm like, I wasn't even looking at it. I was actually busy staring at like the yen pairs and everything else, and crude's rolling over from where we had been talking about this for the last 2 or 3 days, right? If you've been listening to the face webinars, if you've been listening to the daily roundup, so that's it's actually really reversing pretty good. Okay, so we got S&Ps that are bouncing a little bit here. Let's go intraday. S&Ps that are trying to firm up. So I wonder if that's going to help
ADP in about 30 seconds.
The dollar out a little bit, or the dollar sell off a little bit and help the euro and cable. But it doesn't seem to be doing that right now. The cable's trading heavy. The euro's trading kind of, heavy-ish. Stelio said, "Could you hear us on the what?" No, I couldn't hear you. Can you say hello?
Hello, 1, 2.
Hey, I can hear you.
Yeah, now we can hear you.
We have ADP coming up.
How's it going? Oh, wait, we have ADP numbers, right?
5 seconds, yeah.
Yeah, that would be it. Okay. ADP numbers are out. What do we got? I'm not looking.
2.36 million.
2.36 million, and that was
almost 2.37 versus 3 million expected.
Okay. So could have been worse, right?
It can always be worse. Yeah.
What do you make of those numbers? Sorry, I could barely hear you guys. I got to turn on my.
It is actually worse than expected. We're talking about employment change.
Right.
So it's 700. It's more than 600,000 worse than expected.
So it's worse than expected. We're seeing the dollar just kind of waffle around. We've got the dang it, hold on, man. Sorry, guys. People in my office talking. So we've got the cable that's kind of bouncing around, the euro that's bouncing around a little bit. You think you see a little bit of dollar weakness, but it's not really translating into that right now, at least not at the moment. So Stelio, so yeah, I know you're away from your computer, but I heard your voice, so I wanted to see how things are going. Are you staying on top of the markets where you're at?
Yeah, I'm at my computer as well, so I'm keeping up. Hello, everybody. I think the main thing, maybe, oil has been going down the last 10 minutes. Maybe somebody knew this number. I don't know. But I think the main thing with the month end, quarter end, half year end over is equities. And they started well this morning, but they seem to be pulling back now. And they're going to be driving everything. We've said this every day, I think, for the last weeks. I still think we're going to see we should see a good leg lower, but obviously this is not coming yet. We had some data today. It's funny because this is June now, and we've got June data coming out, which means that in most countries we've had the lockdown lifted. So you see PMIs, you see retail sales, like we saw German retail sales, big double-digit growth. Obviously, we have to compare to where it was before and the massive drop. But still, you're seeing PMIs in the 50s or close to 50s, and they are definitely encouraging. But they are to be expected, right? Because we did remove lockdown in many countries, and people are going out.
Stelio, something very interesting. I just see that they revised the previous month's number. Now, hold on to your chair for that. From minus 2.76 million to positive 3.65 million. So
Wow.
in essence, they revised it by something like 6 million. I have no idea what kind of methods they use, but this is just a joke. I mean,
this actually is in line with non-farm payrolls last month. Remember?
Yeah, it is. But I mean, how can you exactly miss the number by 6 million?
Yeah, it's I don't know the calculation, but it is huge. I mean, the margin of error is huge. Yeah.
Yeah, I mean that's a big calculation error, right?
Yeah. But
the dollar is not responding to it. Anyway, go ahead, Stelios.
I was just going to say, going back to the numbers, we're seeing numbers PMIs which are around 50. Chinese manufacturing PMI in 51.2. Remember, we have to understand how these are calculated. So that means that they're not dropping anymore. It doesn't mean we're back to where we were, 3 months ago. But still, it's good to see some kind of consolidation. Although we have to be wary about the number of cases. COVID cases going up into many areas of the world, and this thing has a lag, right? So when cases go up, then things start closing down. Then you see PMIs going down. So I don't think we should celebrate prematurely. It's obviously a good thing to see things stabilizing, but I just want to see more information and more data coming out before I can become optimistic. The other interesting thing I read today was that since April, over 30 million barrels of crude oil have been removed from floating storage. This is something that we were talking about oil for the past few months, especially in the May expiry when we had those crazy negative numbers in futures. With oil at these levels, we've always said supply and demand is a huge factor, and production gets closes quite quickly. You've seen Baker Hughes oil rig count go from 800 to 200. So, you have production which is stopping. It still costs a lot of money to produce and refine oil. So what you're going to do, people who need oil, they're going to go to the storage and start taking the oil that's already there. So it doesn't surprise me, but we are seeing numbers, pretty big numbers, 30 million barrels removed from storage since April. And this, again, I think is one of those lovely things that oil has, which is automatic stabilizes in its price. And I think I've said this so many times. I write it on my macro analysis on Forex Analytics. You know, forays into $20 or $30 of oil is they're always going to be very, very short-lived, because exactly of that reason. You know, supply drops dramatically, and even if demand drops a lot, which it has, eventually there is an equilibrium at levels where it makes sense to drill oil and process it. So this is something that I think is driving oil prices higher. Obviously, we're rallying again today, and you know, oil in the 40s, I think, kind of makes sense for where we are now. I'm not saying it can't drop again. If we see a big equity sell-off, I think oil is going to follow. But I'm just saying, such forays into, you know, 20s or teens or wherever, I think it's going to be very short-lived.
You got to take advantage of them, because that's when people like will cut. Producers will cut supply to stabilize prices. Always, right?
Exactly. You know. And you have the converse. You know, when oil goes to $100, you have producers who are hedging their production years forward, and they do that.
New producers coming in and supplying even more than initially. So yeah.
Okay. Well, I mean, that definitely makes a lot of sense. So what do you do with it here when it's at 40? Because this has been, technically, I mean, I'm a little irritated because I got stopped out of my remainder of it. But I still believe that while we're below this channel resistance, because we broke down out of the channel. So it's like, while we're outside of the channel now, my focus is definitely lower, but and it has been. I can't believe I missed my entry today, where I should have been. I should have been short. Over $1.50 ago, but I'm not. So anyway, but I still think while we're below probably these recent highs, we'll probably end up correcting, probably due to the softer global demand picture due to COVID, right?
Yep.
In any case, I think there is no risk reward being long anymore until we see a deeper correction lower.
Yeah, that makes a lot of sense. So, well, thanks for your insights, both of you guys, Steve and Stelios. Steve, how are you doing today?
Good, mate.
Good. So right now, we've got a little bit of movement in currencies, but it's been pretty benign. I don't know if you were watching this little false breakdown in the euro. This, I tried to be short, waiting for this move lower, and it kind of gave us a false breakdown. Now it's bouncing, and we've got equity markets that are firming up a little bit here, which suggests to me that the euro could trade back up into the teens or the 20s if the equity markets stabilize. But I don't know if you saw my S&P chart. Well, both of you guys, both you, Stelios, and Steve, we're in a consolidation, and if you look at the Aussie dollar looks exactly the same. The 4 hour of the Aussie looks exactly the same. So my 2 cents is, while we're in this consolidation, you have to be really careful about being too directional in equities right now. What do you guys say about this consolidation that we've got? And by the way, the consolidation really suggests that we're going to stay this way until probably till next week, realistically. And then tomorrow might be the day too. I mean, it's
we have data tomorrow, so who knows? Maybe the data.
So maybe that'll be the catalyst that drives us out of here. But I really think it's going to be more into next week. But what do you guys think? What do you guys think here?
I think it's a big danger. I spent a lot of time talking about it yesterday, after you were off, Blake, saying that, listen, we have two opposing forces pulling the market in two directions. One of them is fundamentals and all the risks that are currently looming, from Biden being elected, which we know that it is negative for corporate earnings expectations, to the obvious elephant in the room, which is coronavirus spiking higher again, which, even if they don't lock down the economy, we know that it's going to affect human behavior and is going to reduce economic output and demand. So one one force is the fundamentals pushing the market lower. The other one, which is holding the market and trying to push it higher, is the huge amounts of liquidity and intervention on all capital markets from central banks. So, the big problem here is that it is almost impossible deciding on a fair equilibrium between these two forces. And there is also the possibility that these two forces might spend quite some time, in essence, nullifying one each other and having markets that more or less are going to be range bound.
Yeah. Well, do you think, and this is my opinion here, is that while we're range bound, at least in the equity markets, the currency markets are going to have a hard time gaining any traction.
Oh, absolutely.
Yeah.
Absolutely. I don't think they can do anything without a decision, from the risk side, because, decision from the risk side is going to affect what the dollar is going to do. And until the dollar takes a decision of what it wants to do, I think the vast majority of the Forex markets are going to just be sitting there idle. You know what I mean?
Right. Now, one last thing before I turn it over to you, Steve, and maybe I can get a little opinion from Stelio. Stelio, you still here?
No, he's not, mate.
Oh, he's not. He disappeared. Okay, maybe your opinion here, Steve. Silver continues to plow higher, and you notice how silver actually broke into new trend highs, and we took out the 18 level, and silver looks pretty well bid. Everybody's is trying to lean into short gold, thinks that gold's going to go down from here, but it continues to just grind up higher. How do you feel about precious metals here?
I've described it since many weeks ago as climbing a wall of worry, and we've seen that happening before. There are a lot of people that don't like this rally, and they're trying to short it at any given opportunity. But the main case remains the same, which is we're currently living through probably the best environment that somebody could envision for monetary metals. So I think that it is a very, very tough decision that somebody needs to think of, very carefully to try to be short metals under, these conditions.
Yeah, I mean, it's not gonna go up every day. I mean, today it's down.
No, of course not.
And it's gonna, you'll have your days where, people get excited because it's down 0.5%. And they're like, here it is, it's starting right now. But in all actuality, I mean, this is probably the best environment to be long gold. And it, as frustrating as it is, and I would say it's frustrating probably for longs too. If you bought gold over the last, let's just say several weeks, you're probably like, why aren't we 10% higher right now? And we're just, kind of bouncing our way higher. And then if you're short it, it's obviously a very frustrating trade because you're losing money and it's just up in your face all the time. So, but yeah, I mean, these precious metals still look.
The thing is that people should keep the following in mind, and you being even a lot more experienced actually in the financial markets. For 25 years you've been doing this. You know very well, Blake, that when something is moving like this, like climbing the wall of worry, two things can happen. One is that at some point you get a sharp corrective move lower. The second thing that can happen is that with everybody expecting that at some point, this move that seems to be lacking momentum is going to stall and reverse. What we've also seen in the past happen in such moves on occasion is that they just explode higher at some point.
Yeah.
And I do consider that a potential outcome. I mean, when people are like looking at it and they're like, okay, it's diverging here, it's diverging there, momentum is waning, and then you might wake up one day and find gold $100 higher.
I think, yeah, and that actually happened. If you guys, and I know I've gone over this in the past, but briefly, if you remember, post financial crisis. Whoops, let me go over to a weekly chart really quick, and then I'm going to turn it over to you, Steve. Post financial crisis, like 2007, 2008, this era. If you notice this, move here. Remember, this is post-financial crisis, the GFC, after we've added to the balance sheet. The Fed started adding to their balance sheet, but now it's not just the Fed; it's every central bank out there has really gone to town. These were the days where, it would be, for me, it would be in Asia, and you would see gold rip up like $40 and you'd be like, what the hell? Oh my God. In Asian trade, I mean, when
Yeah,
nothing is usually
and 40
happening.
bucks at 1,100 as a percentage is,
I
what
mean,
would be
yeah,
today a 70 buck move,
yeah,
right?
yeah. I mean, the moves were gigantic, and we could be very well set up for those outsized moves again here in the future. So just,
And
yeah, I would
especially
not.
silver has the potential of being more volatile than gold. So,
Yeah, I mean,
during
when
crazy days, silver can produce, explosive moves.
Yeah, if you remember, I remember when probably one of the smartest silver trader guys that I know. He's actually a financial advisor, or not a financial advisor, a wealth manager, whatever he is. But he's nailed this. I've watched him nail the silver market for 20 some odd years. He was just dumping in mass in the mid 40s up here. And I remember when he was doing that, and I was like, I was trying to sell all my silver people that I knew. I'm like, sell it, just but anyway, because I was actually a gold bear at that moment at the same time.
Something tells me that that's not going to be historically the last time we will have seen silver in the 40s.
Oh, I'm sure it's gonna, Stelios has been beating the drum on that a long time, and I would not be surprised if silver makes an epic move again in the coming year or two.
Just look at the channel you've drawn there. Imagine what's going to happen when
Yeah.
we break through that one, right?
We break through 20. Yeah, we break through 20, and it's going to be pretty nuts. Anyway, all right, Steve. Well, I'm going to pass it over to you, and everybody. I want to thank you all for your support continuously, listening in. It's Pete. Pete had made a comment earlier. He said, "Kudos, Blake. We all appreciate your awesome work and the stupid hours you adhere to. Cheers, mate." And thanks, Pete. I personally, self-inflict these hours on on myself, because I made the move to where I live to be with my family, 8 years ago. So it's just part of it, doing what I do at the place that I live. So anyway, hey, I appreciate all of you guys, and Steve, I'm going to turn it over to you.
Thank you, mate. Enjoy
All
the
right,
rest of
buddy.
the day.
All right, you do the same. Thanks, everybody. I'll see you guys in 4 hours on the daily roundup, by the way.
Yeah, and you should definitely watch it if
Yep.
you're Forex Analytics members.
Yep.
Okay, perfect. So we had Stelios pop in as well, which is nice to hear his voice. You get your share of Blake these days. As Blake told you, Dale had to go through a routine operation, so he's going to be absolutely fine. He's taking it easy for a few days. He's going to be back with us on Monday. On the other hand, since we last spoke yesterday, obviously not many things worth talking about have happened. One of the exceptions, though, has been the cable. Because if you remember, we were talking yesterday, and specifically I mentioned that, don't believe that you're going to see, cable moving in the opposite direction of the Euro USD for a long period of time. It can do that, for a day, for a couple of days, for a few days, it can be diverging. But in general, keep in mind that they're going to be following more or less the same direction. On occasion, the extent of the moves differ, but the general direction is going to be the same. We also mentioned, before I go back to it, we also mentioned, I had a question yesterday about the Euro pound, and I specifically mentioned that, the day before yesterday as well, now that I remember. And, I mentioned in both cases that, this is not a place to belong anymore, the Euro pound. The dangers, the danger is that, the risky world has shifted to the downside. There were opportunities that you could be long the Euro pound, but not anymore. And we've seen quite a massive move the day before yesterday. Yesterday, you can see the candlestick, right? It was a Marubozu closing black and a huge one. So, you can put that down as a reversal. Of course, the previous resistance, which is now support just above the 90-cent mark, might still act as support. But needless to say, you have to keep an eye open, because if we do break through 90 cents, which is more or less going to be breaking through the ascending channel trend line support, I think that this will indicate that this rebound higher has ended, in which case we should be looking for lower levels, in which case we should be looking for the pound to overperform. Now, with the catching up that pound did yesterday, having to do with the Euro USD, we now see more or less the same type of formations. Just the pound has a little bit of a head start now in the potential of breaking higher through the corrective channel, because I'm still viewing these channels as corrective. Here is the Euro USD. It can potentially push even lower within the channel before it moves higher, but doesn't necessarily need to do so. On the other hand, the pound, here it is, testing. I mean, yesterday it was nearing, it was much closer anyhow to the trend line support of the channel. After yesterday's, reversal intraday reversal and closing more or less at the highs, we see that we're very, very close to this resistance. So bottom line, you like it short, you still like it short. This is the place you want to be shorting it, because, we're very close to that resistance area. But if we break through this channel, I don't think you want to be short anymore, because I think we're going to see a squeeze and we're going to see another extension to the upside. I wouldn't even be surprised if that led to a move above the previous high at 128.15. But anyhow, one day at a time. We're currently near resistance. As long as that's the case, there is only an argument to be made to be short if you're looking to take action immediately. On the other hand, if you do think that this move lower is corrective, which I think it looks like it's corrective, then you might want a little bit more confirmation. You want to see a breakout from this channel, and perhaps that's the place where you want to trade it to the long side, as I said, for another extension to the upside. Clearly, the dollar index itself is quite undecided, because if you zoom in, and candlesticks are important, because candlesticks in essence give you, of course, the shorter the time frame, the less important. So if you're looking for like 5-minute chart, yeah, a 5-minute candle tells you more or less nothing, except if it's something like really massive. I mean, you should make no judgment, or draw no conclusion from a 5-minute candlestick. But a daily candlestick, incorporates 24 hours of price action. So, it tells you more things. Now, specifically when you have like consecutive daily candlesticks, like you can see here, telling you more or less the same story, which is indecision, right? I mean, you get a pin bar, another pin bar, another pin bar, so far a spinning top today. So we're clearly seeing that what we've been showing in the stock indices, that they're coiling the same type of situation we have here in the DXY. And it's, of course, it's not by accident, right? So it testifies to what Blake and I said before, which is that we need to see a resolution, one direction or the other, to risk assets. And that's when the dollar is going to make a decision on what it wants to do. Does it want to continue this corrective move higher, or does it want to just roll over and break through this channel and accelerate to the downside? So I'm afraid that until that happens, at least my trading style is remain patient. If you have positions and you've already committed to positions with a specific trading plan in place, of course you should stick with them. But if you have no positions and you're looking to position yourself at the moment, the smartest thing you can do is just remain more patient and get more evidence, so you can enter a trade, not coin flipping in essence, but having like a more educated guess of what's happening in the markets. So it all comes back to what we said. Here's the triangle in the S&P. I'm using the S&P because it is the barometer for risk. It is the it is like global like benchmark for risk. So if you want to if you want to look just at one index to get the general idea, the S&P is the one you should be looking at. The Nasdaq, for example, if you have a look at it, it looks somewhat different. Having said that, I do notice a potential ending diagonal here in the Nasdaq, an ascending wedge, right? You can see 1, 2, 3, 4, 5, perhaps. So, you know, just by isolating in the Nasdaq, I would find it quite appealing to see another higher high. By the way, notice at the same time the very clear RSI divergence here on the daily, right? I mean, this high had a higher RSI reading than this high. So who knows? Perhaps we can get another push to new all-time highs with RSI still diverging. So I would find that as an appealing signal, you know, for a pullback, even just back to the 9,360 area, because wedges, you know, the minimum expectations and the minimum target is a retracement, a full retracement of the wedge. In that case, that would mean a retest of this. Let me see what it is, 9,381 area. So who knows? Perhaps we can see this push higher at the same time at the S&P. We might get something like this, a retest of the previous high, or perhaps an incrementally higher high, right? Something like this to test the confluence of the 88.6% fib and this horizontal resistance area, and then lower. So that is also a possibility, right? So the two possibilities from here are, you know, these. Now, of course, you know, it can move lower than that, right? So, you know, one step at a time. And of course, you know, whatever the S&P does here, the inverse is going to happen in the dollar index. So, you know, keep that in mind. If we see the S&P dropping lower, breaking through this triangle, you should expect that the DXY is going to be very decently bid. In the opposite scenario, you should expect that the DXY is going to test and probably break through this corrective ascending channel, in which case a lower low is probably in the cards, right? Now, since we had people asking about crude, you know, more or less inevitably, not 100%, but I would say like 80%, a resolution to the upside in stock indices is also probably going to produce what I was talking about yesterday, one last move higher in the crude before we see a deeper correction. So, you know, something like a push towards like $42. $42 has been support resistance area in the past if you zoom out. So perhaps $42 is going to do the trick before we see, you know, a deeper pullback. So as you see, crude oil more or less gives us the same picture. From a technical perspective, I have to tell you that these formations, Aussie USD as well, Blake mentioned that it looks eerily similar to the S&P, and of course it's not by accident. So from a technical perspective, you would expect that it is a higher probability for these formations to get resolved to the upside than to the downside. So I have to tell you that. I mean, from a technical perspective, I would give it like a 60% chance for the next move from these formations to be higher. But keep in mind that triangles are terminal formations, which means there is a higher probability that these moves are going to be resolved to the upside, but there is also a very high probability that this move higher from these triangles is going to be, at least in the short term, a terminal move, meaning it's going to reverse and then produce a deeper pullback before we can discuss how we continue from there. Likely that's going to be corrective because we know that the environment is extremely supportive of risk assets, irrespective of what's happening, you know, fundamentally, right? So I have to be honest, I wouldn't be looking, at least initially, for, you know, very deep pullbacks, but I would be looking for decent pullbacks. But as I said, this is likely to happen from a little bit higher levels than we currently are. So if you're asking my main case scenario, that probably is it. That doesn't change the fact that even from current levels, the risk reward does not favor long positions, because I said that this move might be terminal, and sometimes these moves out of the triangles create incrementally higher highs. So you might see just very briefly posting a higher high before reversing lower. So from current levels, or, you know, despite me believing that the upside is more probable, I would still favor short positions. That's why I'm still short the S&P and the Nasdaq. So keep that in mind. Let me go through some of your questions. Good morning, good morning, good morning to everybody. Why you think dollar must go down with risk on? Because that's the current correlation and it has been for some time. And I think that there is no indications that this correlation is going to change imminently. That is why. So we have to stick with that correlation until it proves that it has changed. I don't think, though, that there is something at the moment that is telling us that this correlation has changed. I do believe it's going to change in the future, but I don't believe that we still that we have already the ingredients needed to change that correlation. By the way, one thing that I forgot to mention before is the very interesting, because from a technical perspective, it's definitely interesting. And I think I mentioned it yesterday that we were at a key resistance area. And if I didn't mention it yesterday, I definitely did the day before yesterday. We got rejected here from this descending channel in USD CAD. So keep that in mind, because this was a key area of resistance. I had already marked it on my chart as a pivot area. Whenever I choose a level and put arrows in both directions, it means that I consider that to be a pivot area. And indeed, it acted as a resistance to begin with. So we've seen a move to the downside. I'm really curious to see if we're going to see continuation lower from here or not, because we know that the Canadian dollar is one of the weakest currencies against the dollar for quite some time. So, if you see the Canadian dollar getting beat against the US dollar, that's probably one indication that the dollar's next move might be to the downside. So I'm paying quite close attention to it. And as I said, initially, we're seeing quite a nice rejection, because it's not only that we found resistance there for like 2.5 days, but it is that yesterday's candlestick is, quite a decent one to the downside. So that's something that you should definitely pay attention to. Hi, Blake. I sold the crude after your roundup call last evening, as you mentioned. Yeah, against the highs, Venkat, that can work. But keep in mind, as I said before, and let's go to the 4-hour chart in crude, and then I'll go to some of the crosses that I mentioned earlier in the chat room as well. If you look at the short-term chart, there are two probabilities here. Here's the 4-hour chart of crude. So probability number one is this, in which case you don't want to see higher levels. You want to see, this 4-hour rejection accelerate to the downside. Okay. Now there is another scenario as well, which is this. Let me choose a different color. This being some type of a triangle. And seeing something like this before lower. So, keep that in mind. That is a probability. Okay. Another move towards like 42. And then lower. In any case, I don't believe there is any more a viable risk reward for somebody to be long. So although there is a chance we're going to be breaking to the upside, I don't think anybody should be chasing that move. I think it's too late to chase the upside in crude. I think it's more or less time to start looking lower. Also notice here on the 4-hour chart, Dale, who isn't here today, would probably, see a 3-drive formation there. Just look at the RSI here. The 4-hour RSI was at like 85. Then, while price was quite a lot higher, the RSI was at barely above 70, right? And most likely, if we see another incrementally new high, I doubt that the RSI is going to be. It's definitely not going to be at 85 again. Might be at 70 once again, or something like that. So, even using the RSI as an indicator, this looks to me that even if it produces one more high, it's probably going to be the last one for some time. We're first going to need to see some type of a deeper correction. So keep that in mind. Now, what I mentioned earlier in the chat room is that, which is another indication that perhaps indices are first going to break and risk assets are first going to break the upside. Look at Euro-Aussie and Euro-Kiwi. We know how well correlated they are with risk, inversely correlated, okay? So look at the Euro-Aussie testing support. Very decent chance that this is a triangle that's going to break the downside. Still holding support, but no, I mean, can easily break through support within this day. Look at Euro Kiwi that has already broken down. So I think that Euro Kiwi might just be leading the way here. We might see Euro Aussie following, S&P following to the upside, of course, in this case, Aussie USD following to the upside, Kiwi following to the upside, crude oil following to the upside, and then seeing bigger reversals. Okay. So, Euro Kiwi might just be leading the way. Manufacturing PMI from EU and Germany are better than expected. Euro strength. Yeah, but, these are not enough to move the market. I mean, we get a lot of data lately. Some of them are better, but, keep the bigger context in mind, which is, a somewhat better recovery from, the worst numbers we've seen in history. So, when you put it like that, it's not as powerful. Forex Gal says all fake numbers. Listen, I don't think that all numbers are fake in any case. Do I think that they massage the numbers as much as they can? Yeah. We also know that they've changed calculation methods multiple times in a way that helps the numbers look better. We know that as a fact. But overall, I don't think that the numbers overall are like toyed around completely. I mean, I don't think they make up numbers out of nowhere. I think there are issues, though. There are definitely issues and questionable tactics. I mean, we're not at the level that China is, to be producing numbers out of their, I'm not going to say the word, but I think that the numbers are less reliable than they used to be in the past. Let me put it like that. Would be hard with the inflation in this decade. That's a comment from Dominic, and if I remember right, that comment came through when we had this discussion about the potential for more upside in gold and silver. Let me tell you here that we've seen gold in the past doing well in environments that don't have high inflation either. Also, it's a big discussion what we mean about inflation. I remind you that traditionally, irrespective of the fact that they decided to change the definition later on, inflation, the definition of inflation is the expansion of money supply. So we are currently in an environment that has the highest inflation we've ever had in history. Now, if we're talking about price increases, we have that as well. It has not expanded yet that much to consumer prices, although it is there. It's just not easily visible. We've had this conversation in the past when I was explaining that the normal trend on an economy that is a lot dependent on technological advancements, the natural trend would be for us to have deflation, more or less constant deflation. And oppositely from what they're trying to brainwash people and students in universities, because I've been in one, so I know, deflation is not a bad thing. Deflation is actually a good thing. And it's normal for an economy that is increasing its productivity, for economies in general that are increasing their productivity and they're technologically advancing, to have deflation. And the only argument against deflation that they have is that deflation gives a disincentive in investment, which is, of course, BS, because nothing is negatively affected by deflation. Do you know anybody that's not going to buy a computer today just because you can get, by spending the same exact amount next year, a little bit of a better computer, or the same computer by paying it a little bit less? No. If you need a computer today, you're going to buy a computer today. Also, let's say that you're in an environment of constant 1% deflation. Do you know any businessman that goes into the whole process of investing and creating a business that is looking for a 1% return? Because the argument is that if your money are increasing in purchasing power by doing nothing, you might just put your money on the side and wait. But in all honesty, do you know any businessman that is going to go through all the risks of creating a new business, setting up an enterprise, hiring people, going through all the legal paperwork, going through all the processes of hiring who needs to be hired, taking all the risks associated with competition and whatever else is needed to get a 1% return? Obviously not. Somebody makes a business because they want a return of 10%, 15%, 20%, 50%. I mean, nobody's going to stay idle not using their money to invest because their money are going to gain 1% of purchasing power per year. At least I've never met that kind of businessman ever in my life. I don't know if any of you has. So, the general arguments that deflation is going to be hurting economic activity and is going to prevent an economy from growing in the future is BS, and it's completely made up to hide the obvious reason why they need inflation. They need inflation because the vast majority of the countries are completely bankrupt, projecting 50 years into the future. And no politician is honest enough to tell people that, listen, all the promises we've made in the past, we cannot uphold them. So we either have to renegotiate to see what we can actually afford, or sorry, you're not getting anything. No politician is going to say that. So since no politician also wants to say directly that we're going to tax the hell out of you even more. So there is the third option, which is the dishonest option, which is taxation through inflation, taking away your money through taking away your purchasing power, and reducing liabilities by reducing the real value of liabilities, right? Nominally, they'll stay the same, but when the time for them to be paid comes, it's not going to be the same money. It's going to be a lot less. So, that is why they've built this stupid argument around deflation. I've said it before, the best 100 years in the US economy, when it grew up from being, the beginning of something, the beginning of a country that just came out from being under, British control to, being an independent country and, building a roaring economy, the vast majority of those years, it had deflation. And there was nothing wrong with that. So the natural tendency of an economy that is productive is to be deflationary. And that's absolutely fine. Why hasn't COVID-19 resurgence, along with municipalities closing bars and requiring masks, caused a drop in equities? Because the market, Eugene, is simply expecting that that's going to be countered by even more stimulus from monetary authorities. And, the simplest way to prove that, because everybody knows it in their heart, is the following. What do you think is going to happen today in the markets if Powell comes out and says, listen, we put all the numbers down and we decided that we've already expanded our balance sheet, more than we should. So no matter what happens from this point on, we're not going to be buying more assets, and we're not going to be inflating the balance sheet anymore, even if we have to close down the economy again. What do you think is going to happen that very second in equity markets? They're going to be limit down for days in a row. So, since I'm assuming that none of us here disagrees in what I just said, that also, reversing that gives you the answer why the market is not dropping despite the resurgence in COVID-19 cases and despite the economic damage that seems to be accelerating, because even if we don't close down the economies, as I said before, economic activity is going to be affected. Question about the pound yen. So yeah, absolutely. Let's have a look at it. So here's the pound yen. Quite a massive move yesterday. And look at this candlestick, by the way, right? Quite a massive candlestick. And we've now broken through this descending channel. So I have to say that, from a technical perspective, that is, quite a decent development here. Now, let's have a look at it on the 4-hour chart so I can tell you what is troubling me a little bit here. So let's delete this. And let's draw this. So this, I'm looking at this little resistance area here. Okay, this one, the blue one. So we've already seen a first sign that we're breaking out, which is this one. Now, two options here, in my opinion. One, you get a retest of this broken channel. Great risk reward to buy it. Alternatively, you buy the breakout from this little resistance area. Okay, that's what I think of the pound yen. Hi, Steve. I have bought large position on short oil, 40-30. Should I? Okay, I've already answered that question. I mean, we went through. I told you the two possible outcomes in crude. I do think that the next bigger move is going to be to the downside, which I'm going to be looking to buy, by the way. So, I'm in general bullish crude oil, but I'm not bullish crude oil at current prices. I think we might see a little bit of a higher price, but I think the risk reward is definitely more appealing to be short. But you need to be careful with your risk reward there, because if you've gone all in and you can't afford to see crude moving towards 42, then perhaps you should reconsider. Hey, Steve, I see there is more than one RNO. Could you please check RNO, more than one RNO? Yeah, I'll be more than glad to do it. Let me finish up with the FX questions, and I'm going to do that for you, Dimitri. What do you think about EuroCAD? EuroCAD, to be fair with you, I don't think I've had a look at it during the past several days, but let's have a look at it together. That's what I think about it. Back testing this support area. Actually, let's redraw this to be a little bit better, and okay. So there's that trend line. Let's copy it. It's currently at support, as you see. So I think that if you really want to do something with it right now, probably buying it is a better idea, right? From a risk-reward perspective, you can see it here. But if we drop, below, like, what is it, 152 roughly, look lower. So actually, you caught it at the pivot area. So there it is. This is an area of decision for this market. If WTI is going down, peculiar that gold will not go down together. No, it's not. Actually, I disagree. It's not that peculiar. I mean, I'm not saying that it would be peculiar for the opposite to happen, but keep in mind that gold is a monetary metal. It's also a metal that's used in industries. So gold can move for various reasons. Okay, so it's not that peculiar. Yes, US dollar is a common denominator. So, obviously when the move comes from the side of the dollar, so, let's say that nothing changes from yesterday to today, having to do with it affecting gold or crude. They're going to move just because, let's say, the dollar is going to move one direction or the other. But don't forget that there are factors that are specific to crude oil and factors that are specific to gold. So, I mean, let me give you an extreme example. Not really extreme, but let me give you an example that's quite, let's say, intense and obvious. Let's say that we get news today that show that the financial system is in jeopardy. What do you expect is going to happen? You're going to see a big bid in gold, right? Because gold is a hedge in that case. And you're going to see a big move lower in crude oil because that will potentially be very bearish for oil demand. So there are possible scenarios that I can think of that would make the two of them actually move completely inversely to each other. What are your thoughts around airline stocks? As a general direction, I think that airline companies it's going to take a long time for them to recover, more than the average market participant expects. So in the context of the asset bubble, in the context of an environment that there were people rushing to buy new stock issuance from a bankrupt company like Hertz, nothing is impossible. But assuming that fundamentals will at some point take hold, I would be very, very careful being long the airline stocks. I can tell you that much. I think they are a casino play, more or less. So you want to invest in them, you should invest in them from the context of, you're a gambler going in a casino, playing roulette, and considering that an investment. So I'm not saying they can't work. They can actually magnificently work, but only under a bubble environment. Because, usually when you see a bubble, at its last stages, it's very frequent to see the shittiest assets, and excuse my language, perform better than anything else. But would I be doing that for myself? No, I would not. So you want to build a portfolio that's going to have a little bit of those assets, so you can have more upside under that scenario. But if things go south, at least it's a small percentage of a portfolio. I do understand that. For the same reason, I do understand why somebody would want to have, as Mark Yusko had said, for example, in his wonderful presentation in the Trader Summit, he said, like, listen, why not add 2% Bitcoin in your portfolio? It can give you a nice beta, right? Yeah, it can. It absolutely can. So, under that environment, you might want to add a little bit of, these type of stocks in a portfolio. So, if they do horribly, they're going to make, very little difference. But if they explode higher because, the market suddenly is like, oh, these are battered stocks, we really need to buy them because they're very cheap. Of course, completely disregarding why they are that cheap, and that perhaps, they're only cheap in price, but they're not cheap in, what they represent as valuations. So, that's the only context under which I would be buying them. Similar to Euro Yen went. Okay, let's have a look at Euro Yen. My pleasure, Antonia. So let's have a look at Euro Yen, and here is Euro Yen. So Euro Yen already had a nice reaction from that confluence of supports over there. Now let's go to the 4-hour chart actually, so we can have a closer look at it. Now, what troubles me about the rebound is that, as you see here, I've drawn it already on the 4-hour chart, it still looks like a perfect ABC correction, right? So I have to tell you that I'm a little bit skeptical that something like that might happen. Okay. And this is something that would trouble me and prevent me from buying it, because I saw an initial reaction exactly from the area I was looking for, but I haven't seen the move to the upside unfold in an impulsive manner. So I find that somewhat troubling, which tells me that we might see more downside before we see more upside. Okay, that's what I think about it. Where do you see euro heading? I see euro heading higher. I think there might be a little bit more downside while we are within that channel, but I see euro moving higher most likely. Cable seems to be at a nice area. Do you think we can hit 121? I think if we break through the channel I showed, we can go a lot higher. Now, if we can first go to 121, yeah, as long as we stay in this channel, we can. But my intuition tells me no. Best trade what you see and could hit 1900 areas. I'm assuming you're talking about gold has been reached, so I won't short it until the chart says inflation, debt, QE, weaker dollar makes sense. I've been long since March. I like gold at 1800, 1900s, euro at 116, pound at 126 for the future. Yeah, I think your assumptions seem logical to me. Yeah. Silver follows gold and copper has been interesting too. Yes, copper has been interesting too. I'll have to agree with you, but I'll have to tell you that at some point in the rather near future, I'm expecting a deeper pullback in risk assets, and when that happens, copper should be under pressure. And given the fact that it has already produced a nice rebound within this channel, I think that there is no risk reward in being long copper anymore. I would want to see a deeper correction before I consider that as a possibility. What are my thoughts in BTC? Downside more likely, and Aussie yen. So I'm going to finish up with these two. So Bitcoin. Here is Bitcoin. So two things I want to note here. One, Bitcoin remains below this long-term descending trend line resistance. You can see it here in green. As long as that's the case, from a risk reward perspective, being short makes sense. Now, on the other hand, if we do break, or when we do break through this trend line resistance, I think there's going to be quite a squeeze to the upside. So you should be careful if and when that happens. And although fundamentally speaking, I'm extremely skeptical of cryptocurrencies, and I think that people are flocking in cryptocurrencies for all the wrong reasons, that doesn't mean that under this crazy environment that monetary insanity is the name of the game, they can't actually gain a lot of traction, because it's not really necessary for something to be a good hedge or a good investment or a good safe haven for it to become such. It's enough for a lot of people to get convinced that that's the case for it to work. So, I wouldn't find it impossible for Bitcoin to become something like digital gold just because a lot of people have been persuaded that that's the case. Now, do I think that their arguments are solid? No, I don't. But is that enough for Bitcoin to fail? No, it isn't. Okay, so I'm keeping an open mind, and I think that under this crazy market environment and huge currency debasement, Bitcoin might just end up working. Okay, so I wouldn't be fighting a breakout through this trend line, to put it like that. Now, having to do with those again, and I'm going to finish up with that. So here it is. Perhaps we've already seen a breakout. Who knows? With corrective moves, it's not easy to know. Perhaps we've already seen a breakout. Perhaps we're going to see a breakout. You can't really put a trend line here because wherever you put the trend line, you only have 2 points of reference. So 2 points of reference, you can draw many trend lines from different 2 points of reference, with one being, the high, obviously. But I do think that it is possible that it's going to follow the fate of all the rest that we showed, which means perhaps one incremental new high and then a deeper correction lower, right? Or perhaps a retest once again of this 7650 area and a failure, right? Against the lows, the 7250 lows, not a good idea to be short, I can tell you that much. So it is what it is. Anyhow, thank you all for being here, and we're going to be back tomorrow. I think the week is going to prove to be interesting. Thursday is going to be interesting. And let's hope that we will get some direction, because that's what we've all been waiting for. Now, my advice is that the best thing you can do until that happens is to be patient and, not get yourself caught up in, just wanting to participate because you're bored of doing nothing, because that might cost you dearly. So that's it. Have a great day. Bye-bye.